What do you do when the market starts to sell off like this? Well, I think there's a few simple steps that you can follow to stay on the right side of the market. The first is to see what is the broader market telling you. Even in moments of sell off like this, you want to be looking at the forest, not the trees. Here we can very clearly see that the broader market is still telling us we should be bullish. Now, with that in mind, we come into our individual sectors and see where do we have any kind of bullish activity here. Look for places where you have this market stage of acceleration. There's 6 sectors that stand out: the material sector, the industrial sector, the energy sector, the consumer staples sector, the utility sector, and the real estate sector. So if you are looking to buy the dip, which you should be given the overall broader market structure here, these are the 6 sectors to be paying attention to. So let's take a look at each one of them in a little bit more detail. SPY today, by the way, before we switch to the sectors during the sell-off, breached its conservative volatility box models, and you can see what happened after we breached the conservative models. Very clearly, buyers stepping in. Now, the only reason why I'm looking at sectors here beyond the S&P is the S&P in itself is in a market stage of accumulation, which indicates that there's actually sectors that are outperforming SPY. So I want to buy the dip in those outperforming sectors if I can. XLB is the first sector that is currently outperforming. And if we come inside of XLB, you should notice that during that same sell side activity here, XLB during live market hours with this wick right here is where it breached the aggressive volatility box models and very quickly ripped up from there. It's after this rip up that we breached all the way into the upper end of the clouds, indicating the level of strength that we saw inside of XLB. So XLB, unless you were paying attention, was a very quick trade. You had to be paying attention because this wick real time happened very quickly and was actually where the entry of our volatility box models were. So that then takes us to XLI, the next sector. XLI, same idea. Inside of XLI, we saw a lot more strength in the tail end of the hour, hitting the upper edge of the volatility box models. XLE, same thing, but XLE had strength starting off early in the morning. So in all 3 of these sectors so far that you've seen in which we have our bullish bias, we haven't really had a true opportunity to enter. The first sector where this changes is XLP. And that's the magic of this. You need to find where this volatility is taking place. But what you'll notice is there's really only 1 or 2 sectors every single day where you should be paying attention to. And then you need to just crack open that sector to find the exact setups. So XLP today was that sector for us. Inside of XLP, price action sold off straight into the aggressive volatility box models. And we then saw the edge signal confirmation. Now, during this moment, you'll see price action chops around. We go through the lunchtime hour, and after the lunchtime hour ends is when we finally see buyers step in. Now, what's interesting is inside of XLP, if you take a look at, say, the top, 5, 6 holdings, we'll look at just a handful, but you'll be able to pinpoint exactly where it is you want to participate in this volatility. We use the same exact concept that I just talked about. The idea of you want to stay wherever the markets are green, indicating we're in this market stage of acceleration. So XLP, we can see that the sector is indicating we're in this market stage of acceleration. Now let's see what the top holdings tell us. So I'm going to come into Walmart. Walmart, you should notice we're in a market stage of distribution. So we can skip it. Walmart is not really a top holding that's agreeing in the direction of the overall sector. Next up, we have Costco. After Costco, we have Procter Gamble and then Coca-Cola. So we come into Costco. Costco, check mark. We're in this market stage of acceleration. Next up, we have Coca-Cola, check mark. We're in this market stage of acceleration. After Coca-Cola, I believe we had Altria Group, check mark. We're in the stage of acceleration. And then we had Pepsi as well, check mark, stage of acceleration. So now we know 4 top holdings of XLP that we can be looking at for buying the dip. Now you remember that volatility we were looking at is the 7 to 8 a.m. Pacific hour. That's where everything inside of XLP took place. XLP in this hour breached its aggressive models. I gave it away, but Pepsi, for example, in that hour did not even breach its aggressive models. So Pepsi, much less volatility than its sector, XLP. You come into Walmart, which we skipped earlier, but you'll see Walmart goes all the way down to its conservative models. Next up, we have Costco. Costco breaks straight outside of its conservative models before we see the first set of edge signals. So far we know that Walmart is one that we don't want to pay attention to because it goes against the sector trend. Costco is one in which we've broken well outside of our models. Procter and Gamble, if we come into, has not really given us any sort of real entry, any kind of edge. It's Coca-Cola, very clearly, that's giving you an edge here inside of the models. Now you might be wondering, how do you identify this? How the heck did we get down from XLP down to Coca-Cola, narrowing this down all the way? Well, the live scanner does all of this heavy lifting for you. If you notice, Coca-Cola is one of the trades the live scanner found breaching its aggressive volatility box models in the direction of the trend with a move that's very much in line with what we're typically used to seeing. We also had a signal on the daily time frame, and this was a trade in which we had a fairly high conviction score. So that's where the live scanner comes into play here. It helps you find these needles in the haystack inside of the sectors that you really want to be looking at in the first place. If you remember, we started all of this with the volatility inside of the S&P 500. We looked at the sectors, which were bullish, and from these sectors, we were trying to find places where we actually had a buy the dip setup. XLB gave us really just, well, it did give us a setup, but unless you were watching the market like a hawk, you most likely missed it. XLI did not give you a setup. XLE did not give you a setup. XLP did give you a setup, and it gave you a setup in multiple markets. If we come into XLU and XLRE next, XLU, in that same hour, you'll notice that we do get volatility, but we breach only the cyan lines, falling a little bit shy of the volatility we saw inside of XLP. And finally, you come into XLRE and you notice something similar. XLRE, that same hour, we breach only the cyan lines. So very clearly, XLP, the one sector in that 7 to 8 a.m. Pacific hour that was showing you a good deal of volatility, and inside of that market, it was very easy to spot where you would want to be paying attention. Our live scanner helped you find exactly where you had a volatility edge, both off of the daily and the aggressive models, and you can see the sector volatility side by side to know where would you like to participate. Take care, everyone. Good luck trading, and I'll see you in our next video. For all of our Volatility Box members, if you have any question, feel free to send us an email at contact@tosindicators.com.